Today, I wanted to convey my message regarding what is happening around. I do not need to tell you that how much destruction and chaos and havoc this Chinese coronavirus created, and includes India also. In fact, if we carefully see that in Italy and majority of the European countries, they have almost closed their borders. Officially, Canadian government closed their borders for non-immigrants, which means a non-Canadian national cannot enter into Canada. And almost situation is same in all the countries. India also banned, I think, 5 countries, and Singapore also banned five plus countries. There is a great mess which is happening around. Although, on a positive note, there are few names which are coming in the public domain which suggest that few scientists claim to have a medicine of that. Everybody in the globe, whole globe, is waiting for that medicine to come out. But there are reports at the same point of time which are coming in the public domain which does suggest that this medicine will take around 1 year to make. In all these mess up, I would like to congratulate American presidency Donald Trump for tackling the situation pretty well. But at the same point of time, I would like to have my displeasure with Mr. Powell, the head of Federal Reserve, the chair of the Federal Reserve. I think he acted like a kid when it comes to the benchmark rate. So in this video, we would like to talk about that how the different governments can take up this matter. Either they can take up seriously or they cannot take seriously. And of course, in this video, we will also talk about the impact of the Indian rupee in that regards. When I come to US, first of all, I feel that Donald Trump acted very swiftly. Of course, in the interbank market, and Treasury Consulting is a part of interbank, many people claim that it's all because in November we have an American election. Guys, to be honest, you do not know whether American election will happen or not. We do not know it about. Because as of now, the scene is like that. This situation may extend even in 2021 also. God forbid. I am not a scientist, but I am talking about the reports which are coming in the public domain. Having said that, the way American presidency acted is very smartly. First of all, the Federal Reserve issued open two window. $500 billion repo window 1 month, $500 billion repo window 3 months. So the total around $1 trillion, which I think is a right move. Then Federal Reserve came up with a stimulus package. In fact, government came up with a stimulus package of around $700 billion, which is also a right move. And today US Treasury head, US Treasurer, basically the head of Treasury, Munchin, he said that the government is considering the cash or the tax benefit to the Americans to the tune of around $800 billion. So in all eventuality, around $1.5 to $1.7 trillion of packages being offered or stimulus package being put up in the economy by the United States. Having said that, there is no official confirmation which we received from United States regarding basically the lockout of the boundaries, just like the Mexican people, Canadian people, Indian national, Singapore national, or different people from different nationalities cannot enter into US, or American nationals cannot exit. We do not know, but God knows if the situation worsen from here, maybe such kind of advisory will come as early as possible. Having said that, the biggest issue which we face when it comes to the Chinese virus in US is the treasury yield, which is falling on a consistent note. I don't know how seriously you are tracking the market, but I track market every day, every minute. Last week there was a big issue in the market that treasury yield to touch zero. In fact, in the interbank market, I had a disagreement with a lot of people wherein they said that it may turn negative. I was clear that it is a one-off phenomena that treasury yield fallen. Example, when 10-year treasury yield fallen to 0.24%, many people came in the interbank market and said that it's going to get zero and then subsequently negative. I was very clear it is one-off, and Fed was not prepared at that point of time. That is why it went to 0.24. But if you see today, all yields are greater than 0.5. In fact, I was just watching Bloomberg. 2S 10S yield which means that the difference between 2 year and 10 year is around 59 bips, which is healthy. There's no doubt about that. And 3 month to 10s, the difference between 3 month and the 10s is around 82 bips, which is quite healthy for me. In fact, 30 year US Treasury yield, which is the long end curve, it is also trading around 1.39 and 1.4. To me, it's healthy. So on that front, I am very much okay, and I am having no interpretation issue with the Federal Reserve. I think it's rightly dead, and it is good that Federal Reserve let this to the market, but kept this position open. But unfortunately today, even though Standard & Poor, Dow and Nasdaq opened on a higher side, around 4.5 to 5% today, one negative news came and that really distracted me. In fact, on our TikTok channels, on our YouTube calls, on our Facebook calls, we have already explained and warned people, and that is that the bond yield spiked all of a sudden, and it is pushing a lot of pressure on the exchange traded funds, and especially the corporate bond exchange traded fund. I need not to tell you that there are around 2,600 plus exchange traded funds that are listed only in United States of America, and predominantly they are being led by iShares, which is BlackRock, SPDR, Spider, State Street, and multiple. You have Citibank, you have JP Morgan, you have almost PIMCO, you have almost Vanguard, you have almost everybody. So everybody having the ETF, and guys, trust me, more or less rate of interest is the same. I have saw several ETF, they follow the same benchmark. I think not even 1% here and there. So rarely there is a change in the benchmark. And more importantly, if the benchmark move in the reverse direction, the rate of return is predominantly same. So it's nothing great. It's only the label, right? Like at some places you have PIMCO, some places you have Vanguard, and some places you have. In fact, I do not want you to name in one of the ETFs. I got to know that the tracking error is 0. It means you are replicating. It means how the index is moving, you are simply replicating. How can tracking error be 0? It means there is no creativity. If a tracking error is 0, it means the alpha is 0. And how can ETF alpha be 0? But that's a different interpretation issue. Today what happened, that ETF volume spiked up. In fact, it is slowly spiking up. If that COVID or the Chinese wire will take or get worsened from here, God forbid, people will start pushing the money from ETF, and if that happen, it is mess off. I really doubt even at that point of time, even Federal Reserve, even if they come with 1 trillion offer right away, they would be able to protect the economy. That is the reason the biggest problem for the Federal Reserve right now not yet resolved, even though they offered somewhere between 1.2 to 1.7 trillion dollar of stimulus package. The biggest problem is the ETF outflow, and a little slide of that problem we saw today. So this is about the US part, but I hope that Federal Reserve will definitely take care of that. There is no doubt about that. When we come to Europe, I think situation is out of control. I really doubt the fragile economy of Europe is able to tackle the Chinese virus. I really doubt. Because before Chinese virus, whether it is Germany, it is France, or it is UK, they all are pretty fragile. In fact, when it comes to UK, I need not to tell you that what had happened after Brexit, right? In fact, the UK finance minister is coming up with a statement that the visa cost will rise further. That will dent UK more than it would benefit. I don't know. We all were expecting that in this year we will see the financial impact of Brexit on UK, but who knew that this all mess up is going to get happen? No one knew about that. More importantly, when it comes to Europe, Bank of England already reduced the rate from 0.75 to 0.25, which is around 50 bips. European Central Bank already tested all their weapons effective 2008, and specifically between 2013 to 2015, when a big mess up happened in the Europe about the financial crisis. We all know that what is happening to the shipping industry, aviation industry, hospitality industry and everything. Considering all this, Greece and majority of the countries of the Europe, those who are acting as a big shipping center, like Greece we all know is a big shipping place, right? It's a hub of shipping industry. I really doubt whether they would be able to sustain, because shipping industry like Royal Caribbean, Standard & Poor cut the rating of the Royal Caribbean, or thinking to cut the rating to junk. And I really doubt Royal Caribbean is a one-off case in that regard. There are multiple shipping companies, those who are on the radar. If I'm not mistaken, Royal Caribbean is having around $1.5 billion of debt in the books, which they need to pay. And this is as per the public information. God knows how much is the real debt. I not got the chance to look at their annual report, let it be honest. I really doubt that when it comes to the ammunition, Europe is anywhere into the picture to handle this situation. I really doubt whether it is Bank of England, European Central Bank or European Union. And most important thing I see about Europe is that, it is pretty fragile. Like the way Merkel thinks in Germany, it's not the way the Macron thinks in France, right? And anyways, UK is completely separate now. So it's an odd man out. Rest all are small countries, whether it is Greece, Portugal, Ireland, Italy and Denmark, Sweden, Netherlands, they all are small countries. Netherlands is relatively big, but I don't think they can go one off and they can challenge all this. I really doubt Europe is in a position to get this done, and my limited understanding of the European government financial status, cash rich status, clearly suggests that they are not in a situation to go for big stimulus programs, except few European economies. So my all eyes is on the Europe. And standing today, Euro is trading around 1.09. I don't know whether it will happen or it will not happen, but I'm telling you right away that my biggest fear is that the Euro may came closer to parity. And if Euro came closer to parity, then God knows what would happen. It may be disaster then if American yields will come down to zero or negative. My biggest worry in Europe is three. Number one, it is not well articulated. Standing today in 2020, different nations have different propagandas. Like Germany think completely different, France think completely different, England is out of the game, and rest are small. Apparently speaking, the financial situation of Europe is not good. And I really doubt that in the 5 days, the way American presidency offered $1.2 to $1.7 trillion of fiscal program, any European countries would be able to offer that. But we need fiscal program. Max to max, European economy can make their rates low. Till what extent? Swiss already are having negative low rates. SCK having negative rates. So that's the biggest worry for me. When it comes to Asia, then I focus on 3 countries, in fact 4. I divide Asia like the economists divide AXJ, or Asia excluding Japan. I take Japan separate. I repeat AXJ, Asia excluding Japan. I feel that when it comes to Asia excluding Japan, we need to see at India holistically, we need to see at Singapore definitely holistically, and we need to look at Hong Kong. And if a bit we can see at the Philippines also and Thailand also. We go one by one. I personally feel that when it comes to, I'll start with Singapore or India. When we talk about India, there are a lot of political mess we have here. And unfortunately, without quoting the name of any political party or any political leader, that all political parties are fighting with each other. They're not bothered about that a big storm is at the gate. Maybe tsunami is at the gate, let it be honest. The medical system of India is not equipped to handle this big issue. I really doubt. And in fact, especially when majority of the states of India do not have proper, dispensaries and hospitals, I doubt India is anywhere closer to a position to handle this situation. Anywhere closer to, as far as the medical preparedness is concerned. More importantly, government of India is running a huge fiscal deficit, which on paper is greater than 4%, and reality, that. all government numbers effective several years is subject to scrutiny. Like till 2 years before, the same government used to claim that there is nothing wrong in the system, and in the last 2 years it is being proved that there is nothing right into the system. More importantly, the main backbone of India or any country of the globe which is known as banking, I need not to tell you what is happening in the banking in India. Private equity player taking a lot of stake in India. Considering all these, I don't think there is much RBI also left with, except one, which is the repo rate. Standing today, the only thing RBI can do is to cut the benchmark rate by maybe 100 bips or maybe 50 bips at a point of time. Like yesterday or day before yesterday, when RBI governor was giving a press conference, I was thinking that, boss, is it a press conference? Like, he was just trying to make sure that the depositor in the Yes Bank should not quit. That's the only thing he was doing. Except that I had not got to know what is the RBI plans about to handle this. I think the only weapon RBI left right now is to cut the benchmark rate, which is repo rate. But I really doubt cutting the benchmark rate will serve the purpose, just like Fed. Fed, that is why I tend to disregard with Powell in that way. He acts like a childish person. Immediately he got to know that there is a Chinese crisis started in US. He cut the benchmark rate by 50 bips. Come on, cutting it by 50 bips, it's a stupidity, right? And now he cut it by 100 bips. So Fed is very closer to zero, which in our parlance is known as zero barrier. And I really doubt that if Fed crossed zero barrier, then it is a sheer mess off. Only God can save US. But I hope that Powell, with or without any political pressure, will definitely not enter into the non-zero barrier zone. If they enter, then only God can save. But when it comes to India, India is having another problem, and that problem is the carry trade. Indian rupee is a carry investment currency. Like, I hope you know that, being to our videos, that Indian rupee is one of the carry currencies. If standing today, RBI will cut down repo rate and move to 4.8 or 4.75 category for a minute, I assume, then this would have a direct implication on the carry trade. And if this would have a direct implication on the rupee dollar carry trade, then it is gone. Then it's a big mess. Foreign institutional investors, foreign direct investment, portfolio investors, QIIs, FPI, they would reluctant to enter into India. But once again, blessings in disguise that Federal Reserve cut the rate to zero, so it may act like a blessing in disguise, but till what extent we need to see. But the red flag is definitely here. Let it be honest. More importantly, as we all know that that Indian government is running a high fiscal deficit. On paper, they claim that the indirect tax revenue, which is GST, goods and service tax, is about more than 1 trillion rupee, which is around 1 lakh crore. But practicality, God knows. Direct tax revenue is definitely falling, which is the corporate tax revenue. So I doubt, just like American government who announced $1.7 billion, around between 1.2 to 1.7 trillion dollar of stimulus package in less than 5 days. I really doubt anywhere in India is anywhere closer to 1.5 trillion dollar of announcement. I think Indian government do not have the money. So Indian government, the only weapon Indian government can fire is the cut in the repo rate. This is the only weapon they can fire. Or even if they can fire another weapons, the velocity of these weapons is very, very limited. Second country which I wanted to touch is Singapore. Singapore dollar is around 1.43 now. It is heading to 1.44. It is almost outside the control of Monetary Authority of Singapore, which I don't think it's a right move. But nonetheless, I'm not from Monetary Authority of Singapore. I think that Singapore is reporting the virus cases almost daily basis. In fact, today also they did reported about 19 plus virus cases which came into the public domain. I really doubt when government of Singapore almost sealed the Singapore, Changi, then how come these cases are coming? I think government need to look at that. More importantly, Singapore is a global financial center. There is no doubt about that. If the global meltdown happen, then all global financial center will come to a halt, and Singapore will definitely not an exception. That is the reason that ANZ, Australia and New Zealand reduced or underrate or downgrade the GDP forecast of Singapore government to zero point 0.4, between zero point 0.4 to zero point 0.6. I think it is less than that. In fact, Deputy Prime Minister Hank was talking about the contraction of 0.5% also. I doubt whether Deputy Prime Minister Hank will agree with the fact that the contraction of 1/4 or 0.5% might end up more than 1% of contraction, the way things are happening. So I'm really not happy with the way, the firepower of Singapore. I really doubt it is quite limited. Like, they already have fiscal deficit budget and they offered $4.6 billion of fiscal prudence to their citizens. I really doubt more than that is possible to government of Singapore. Maybe they can try, but really. When it comes to Tokyo, I see that situation is worst. Tokyo, Japanese yen is around 107. From the last 25 years, Japanese economy doing every kind of quantitative easing, but they are failing in all ways. This Chinese virus situation will take a deep toll on Japanese yen, and we expect Japanese yen to touch 90, subject to fulfillment of few equations or assumptions. I really don't think Japanese economy is really right now standing as a recessionary proof currency. I really doubt that. In this Chinese virus situation, Japanese yen will definitely take a dent. This is our outlook about the possible intervention the central banks can do. We also strongly feel that Indian rupee forecast for June is around 77 to 78. To September is somewhere between 83 to 85. I know few people don't like that, but that is our way. In December, I see it around 100. It is subject to three conditions. Number one, we are assuming that Chinese virus will continue till December. That's a big assumption. Number two, and very important assumption which we should be discussing, the invisible section, basically the current account section, the money which is coming to India from software services, it is declining at a faster pace. And Indian information technology industry or any information technology industry of the globe is always running on a basic pillar, that is the servicing of the client, and that too in a physical form. Example, call centers, voice centers, data centers and whatnot. If due to COVID or Chinese virus, these data centers and one thing that is definitely going to happen, that when the entire Europe, US and all, they are on the standstill, the clients will cut the budgets, no doubt about that. You name any company, they are firing people. In fact, aviation is firing like God knows. They will cut the budget, and if they will cut the budget, it would have a direct implication on the Indian IT companies because they are the service providers. If they cut the budget, or it may possible they will go for a price negotiation also, because it's an extreme eventuality. In that regards, the current account surplus, which is coming under the current invisible section, which is coming under the current account of government of India, that will decrease drastically, which would have a deep impact on the Indian rupee because the dollar funding which is coming will not come. Third and very important is the frauds which are happening in the Indian economy. I think it will continue. So, like today, previously it was Yes Bank, today it is Cafe Coffee Day. Hardly 6 days to Yes Bank, and the media is talking about a possible gap of around 2,000 crores. I always think what the people do, 1 crore, 2 crore, okay, 2,000 crores. A possible gap of 2,000 crores in the books. I don't know whether it is deliberate or not. I not investigated. Considering all this, I definitely think that situation is bad for India. I think that rupee has a heading to 85. I am evaluating the option premiums very carefully and I see that rupee may touch greater than 85 by September if the situation worsened, let it be honest. And if that happen, then one thing I'm sure that Indian importer is gone, because it is beyond the pocket of the Indian importer to hedge rupee at 85. So we need to be very careful. This is our forecast. We strongly feel that things are messy, but Federal Reserve handled it well, though I am having interpretation issue with Mr. Powell. I am not bullish on Europe, definitely not bullish on Europe, and I don't think that Europe would be able to handle this situation in a rightest way. You know that what happened in Italy and what is happening in the Spain. The total number of deaths in Italy and Spain are growing like God knows. Italy is almost closed, almost closed. Very, very important thing about Asia is the impact on Singapore, India and Hong Kong. I don't think we need to discuss Hong Kong. After months and months of unrest, social unrest, I really doubt Hong Kong is anywhere in a position to handle the mess. Anywhere, let it be honest. So things are very tough. We need to look very carefully, and I really request people that look the thing holistically. Don't take emotional decision like if rupee is 75, let me sell. No, rupee is 75, wait, it will come down to 83. It will come down to 90 also if the situation bursted from here. So we need to be carefully seeing that. This was our forecast about the overall Chinese factor and the Indian rupee. Let's see how things shape up. Treasury Consulting is keeping a very close eye on market development, treasury yield curve, benchmark curves, BMK and all. With this, we would like to conclude and we would like to give you three good news. Number one, good news is that Treasury Consulting hedge fund already started. We started it few days before and we're doing pretty well. Thank you very much to the Lord. It started. If you have any requirement, you can contact me definitely. We launched 2 Telegram groups which are paid. You are welcome to join that if you feel so. They are paid Telegram groups. Both the courses, video courses, number 1 on the option which is about 800 rupees and number 2 is the equity trading which is about 500 rupees. They are under designing and right to launch, very, very close to launch. As a company, we are committed to launch 26 products by 2021. I know that if not 26, at least we would be launching 20 plus. If you have any question pertaining to this, you are welcome to contact me and my number is 9899242978. Or you can drop a WhatsApp message on 9818485155. I repeat, my personal number is 9899242978. You can drop a WhatsApp message on 9818485155. You know our fixed income platform, www.fixedincome.global. Have a great time and talk soon.